Gentlemen and ladies, how are you? Yes, Palladium. It's been the one precious metal that has outperformed. Now, Palladium is part of the platinum family group of precious metals. So Palladium and platinum, very, very similar characteristics. Palladium, 80% used in catalytic converters. So much so, and with the price run that you see here, they're even starting to see Toyota Priuses being hit for their auto catalytic converters so that the 2 ounces of palladium can be extracted. They'll get about $450 for what they can steal out of the exhaust of some Hollywood moguls Prius car. Of course, it has to be reclaimed because it'll have all hydrocarbons in it and all of that. So in terms of the precious metals, my view has been that gold is going to be softer. And that in fact you've got the platinum complex, which is better. Now clearly this is long standing and already had a run, and in fact we noticed in our community where we were talking quite an abrupt slap in the face there that occurred after running just about the 1600 key price line. Now 1600, that's pretty high, and what you might also notice is that it's both higher than platinum itself and higher than gold. So gold and silver have been the laggards of the precious metals. So let's just have a little look on this on gold. Technically, we've gone down to a 4-hour time frame. We'd highlighted to many that we expected, in fact, a sell-off here. Now, the central banks have been accumulating, and relatively speaking, compared to silver, gold has been stronger. Your gold-silver ratio, very, very high. Silver has been the poor man of the precious metals, and in fact, it's looking really still quite weak. I'm expecting out of this, in fact, that we may have a little bit of a falling wedge, but we'll first spill a little lower, maybe even dip out the bottom before we get a little bit of a bump. So there does appear to be a falling wedge structure on it. I'll just change that to logarithmic and bring a bit more of the recent history into view so that you can spot that with me. Because you can see there is kind of a tactical retreat level which is being held. Let's use the pen like that. So there is buyers coming in on the dips, but there is definitely a squeeze across the top that'll give us something like that. That wasn't very well drawn. Let's try one more time. So there is what we call a descending degree of tactical retreat, and like this. So probably what will happen is either you'll go straight into a bump up, or you'll first dip out the bottom with a little bit of a spill, and then there'll be snapback buying. So there will be some form of a rally, but overall this chart, compared to what you just saw on the palladium side, which we were looking at there, that's platinum where we're going next. I've got to get the right P. That's also platinum that I'm going next. That's the palladium one. This is on a much bigger time frame. This is weekly. So just to highlight palladium, because many of you might not have seen this chart at all, or just seen it in passing and you're not particularly familiar with it, just to highlight, this is 2011. This is the gold at 1900s highs. That also saw silver at 49s. That's where you were, palladium. Now you can see from this that palladium was not enjoying the largest as much, although it had had a good bull run. Typically palladium being cheaper than platinum and cheaper than gold. Now what's absolutely been very, very interesting, both palladium and platinum, a lot of it mined in South Africa, quite inconsistent delivery. There was some drama around platinum mines in South Africa a couple of years ago. But what do we see now? We've seen, well, this is totally blown off again, flag-like, and then another leg of similar scale to the upside. Then that's what we'd call a slap in the face. Potential for a possible trend change has gone a little too far. So for me, palladium is not the one to be in. It was clearly the one to be in post the loss in value that took us into 2014. If we go out to our gold and silver charts again, if we close that and get up to the weekly time frame, you'll recognize that our lows came in and around the basing of 2016 over here. And that is post, I'm talking about the lows post the the highs that were made in 2011, as we mentioned. So with that, what we've got to look at is that Palladium's relative performance has been an outlier. Okay, that bus is largely gone, and I would expect a degree of underperformance. And this brings me to platinum, which at the moment for me is an interesting one and is still close to its lows, and it is something we have that I have looked and purchased for our investment, which is your long term, because it's showing more relative value than gold, more overboughtness, and I expect some degree of snap back out of this particular precious metal. So if we just take it again to the weekly time frame and get a bit more of its journey path since the boom and then the subsequent sell-off, you will see that it had a very, very interesting journey, platinum. First of all, it actually went a lot higher well before gold. So remember, 2011 is our extremity point. I'm going to move that, it's always covering the scale. 2011 is our extremity point here for the highs of gold and silver. That was 1900 gold and silver. Platinum was only marginally higher, so it was holding a very small premium over gold. But it had previously, just before the subprime collapse, gone as high as 2,350, which is far higher than gold has gone at any point in terms of the dollar. So everything here is deemed in terms of dollar. There was a nice setup on the way up for major overperformance. However, the collapse from the subprime crash was absolutely brutal, and I think this will have played a role with autos. So essentially all the American automakers got bailed out. Ford didn't admit to it, but they kind of got a government subsidy they were forced to take, mainly because their financing houses were bust. GM and Chrysler both were basket cases. So this was auto, and production was really, really low for vehicles, and sales was very, very low. And of course there's a catalytic converter. You also have the EU regs that want ever cleaner cars, so it requires more of the material. So that's probably been a driver of Palladium, and platinum got badly smacked with that. It had quite a strong snapback with the then bear, the quantitative easing rallies, but it never went quite as high. Again, the lack of the industrial demand might have undermined that, and it was mainly on precious metal anti-fiat bullion scope and its relationship. However, after that, boy oh boy, did it just keep falling, and in fact it went all the way down to just above 750 in and around mid 2008, while in actual fact gold had bottomed here at 2016. Platinum had continued to go down. Okay, so a very, very bad post 2011 from platinum, after having an exceedingly strong cycle up to the subprime crisis. So that's our timeline on the big time frames to give you this. So this takes me to the next chart, which we'll just jump straight to. And essentially, technically, this is now a platinum chart divided by a gold price chart. In other words, how many ounces of gold do you get with 1 ounce of platinum? So it's an interesting discussion. It's kind of like your silver gold ratio, and it's, I don't know anybody who's ever done one for me. So I'm doing one for myself, and I've been doing a few things. I've actually been looking at valuations on a lot of things in gold ounces, and also rotating them into other ounces, including the Schiller US house price indexes and other things, which we've been sharing inside our Sniper Circle community, which if you're interested in finding out more, you can go to our Market Sniper, thatmarketsniper.com webpage and get more. But let's get back to that platinum, because I was some of these charts and drawings we've been sharing within that community, and that's what triggered me there. So here's the big 2008 into 2009 bottom smackdown. This is in platinum, 1 ounce. How much gold do you buy? Okay, so over here you are at these levels over here. A single ounce of platinum is getting you almost 2.5 gold ounces. Bang, There's your 2008 death of the auto industry, overproduction, oversupply, which I still think is out there, that I think they've essentially reflated with the subprime bubble, and I think will still underperform when we get our next down move and everybody sits with their cars for longer. So this is not an entire cyclical change. This will not wear well the reset. However, there is natural jewelry demand for platinum. Palladium has gone as high as 1600, and they are very, very similar in characters and attributes. And in fact, platinum is easier to work with than palladium. Palladium is quite hard to work with, but otherwise has all the other benefits at least, and has normally dictated a premium over palladium by some way and over gold, but currently not. So the magic line of this chart would be down here, just to highlight 1 ounce of platinum equaling 1 ounce of gold. Isn't it interesting that you got your first bounce there and then you fell through with a little bit of a skirmish either way there, and then your rally point is there? Quite interesting indeed. So the parity, 1 ounce of platinum gets you 1 ounce of gold. But what actually, if we take all my doodles out, you have here is you have the falling wedge, a falling wedge of valuation technically. And this isn't a small. Technical patterns gain further significance with time. In other words, the extent and the scale of their move is proportionate to the extent and scale of the pattern. This is not only time, but it's also height and elevation. You've had vacillations between 2.5. At the absolute lowest point, you couldn't get 0.6 of an ounce of gold with a full ounce of platinum. Remember, that was up there at 2.5 at one point. So the overall valuation, the characteristics of the two metals has not changed. Central bank buying of gold, I think, has probably pushed the price on gold quite high for the bullion reasons that we typically associate. And the weakness in the auto industry, I suspect, would have been the 0809, but there were also above ground stock that are going to be run down of platinum. So there was a lot of stockpile on platinum that didn't exist on palladium, that saw the palladium run and the platinum languish. These will be wearing down. These will be wearing down, and can I say, you have Russia and South Africa. I wouldn't describe them as the most stable, particularly South Africa in terms of labor markets, etc., for mining. And this creates an interesting possibility. So what is the potential trade here? Well, the potential trade here is that you're going to get relative outperformance on platinum to gold coming. Now, if we just take a drop down, this is a big time frame. I wanted to show you the big time frame. So this should run for a bit. It's something you can enjoy for a while. If we take this into a shorter time frame, and we pop into the daily, what you'll actually see is quite an abrupt piece of price behavior. This is, once again, platinum still against the gold. So this is still a relative valuation assessment, but you can see that channel up, and it's bringing you to the top side. Now, remember, even with wedge breaks, you do get return moves before you then get the primary move often. So you can break, return, and then go. If we have a look at the platinum just straight up against the dollar, I'll take you into this a little closer, and we'll pop into the 2 hour, for example, and you look at the price action here. Well, we actually have, and I'll show you very quickly, our particular notion of an upside setup that is there, and that I've shared with the community in greater detail. So there is upside structure with a target that is already in play. Plus, with the gold selling off at the similar type structure, you might remember that as well. If I go back to gold, that's our silver. Let's get him on gold. There she goes. Still on the silver, sorry for that. That's the gold, sorry, I was right first time. It's closing. You can see that that is also in a similar falling possible wedge type structure, and had on the shorter time frame that squeeze across the top. Difficult to see in that, so let's drop him into the 2 hour or the 4 hour. Let's go 4 hour. There she goes. This is what we were warning about across here, with that as a sign of potential weakness. So you've seen that both in the gold and initially at the platinum, but the platinum has largely shrugged it off and based out. So essentially you can argue left head and right shoulder, you have an upside reversal target that will take you up to here. Maybe we will tap out and have another drift and then create a continuation pattern, which we could then trade for a further leg higher. So that's a couple of thoughts. Platinum to overperform in the precious metal stakes, to overperform the gold and silver. So this is the larger platinum complex. We've already seen that. Palladium's already run, and platinum to be the one next to run. And due probably, I would expect, to inventory and stocks overhang eventually being run down, and probably reduced supply. And the fact that people aren't doing the new mines because the price has been so bad. Don't forget, on that falling wedge draw that we had, if we still got him there, and we go back up to the weekly time frame, we close it and we go back up to the big time frame, the undervaluation relative for platinum, and that's going to be for me almost certainly the minute it's at the same parity price of gold. It's a lot rarer. So I mean, there's Palladium is 30 times more rare than gold. So platinum, you don't find a lot of it. So I'm going to automatically say by the time you're at parity, you're already over a relative undervaluation of platinum, if scarcity is the key thing. Now, there's some things that are scarce but don't have great worth. Platinum and gold have all an immense amount of unique aspects and characteristics, and platinum has a few that gold doesn't. So it's always dictated a premium. So I would even say, if you went over all of history, you would normally say 5, 10, maybe at extreme moments 15% premium. Sometimes it's been double gold, but this period at 0.6 certainly seems low, and I would argue since this critical event at 2009, you can argue you've been in a period of undervaluation for platinum, and that's a decade. That's how long it takes to open a mine, a good scale mine that can do something. That's if you found good deposits. So it's 10 years ago since that event in 2009, and platinum has been languishing since. So it could be the value play for accumulation, and remember, it's treated as bullion as well, and can be it's a bit rarer. You might have slightly less options, but it is as good and as rare as bullion gold, and certainly silver, for which there's a lot more about, and you have to hold a lot more storage space for the same amount of value. Okay, so buy an exceedingly rare metal that should trade at a premium to gold. Accumulate now for relative overperformance in your investment strategy, and there will also be trading opportunities. Okay, if you want to find out more about these kind of things we discuss in our community and the goings on inside the Sniper Circle, you can come and find out. Go to the www.themarketsniper.com, book a chat with Brett, our consultant, who was a student just like you 2 years ago. Find out what he's been able to achieve. Until then, catch you later. Bye for now. Enjoy your Easter weekend, he says, belatedly, but sincerely to you all.